Hello and welcome to the June edition of Hot Money Topics. Now there's been a lot going on this month, everything from federal budgets to more concerns about inflation. So without any further ado, let's jump in. The Australian share market has had a good month, rising 1.89% and outperforming both the S&P 500 and the Nasdaq. I do believe this is a trend that we could see more of in the coming months as growth stocks come out of favour and other countries, such as Australia, currently represent better value in their stock prices. In our standard portfolios, we recently switched to a slightly higher allocation of Australian stocks over international stocks for this exact reason. But the latest outbreak of COVID in Melbourne could throw a spanner in the works, particularly if it starts to spread into other states. Gold prices have had a good month. This is largely because investors see gold as a store of wealth during times of inflation. The US CPI index did rise 0.8% in April, which gave the stock market some wobbles. This would have likely been a contributing factor to the run on gold as well. Speaking of inflation, Warren Buffett and Charlie Munger did have their annual Berkshire Hathaway shareholder meeting earlier in May, and they did make reference to inflation, and they said this.
Very substantial inflation. It's very interesting. I mean, we're raising prices. People are raising prices to us, and it's being accepted. People have money in their pocket, and they pay the higher prices.
But something that we've been grappling with lately is this inflation or is it reflation? So in other words, is it the start of sustained prices above the long-term trend? Or is this simply a short-term increase in prices off of a low base? Now, I've done a full video on this and I'll link that in the description box below if you're interested in watching it. The 2021 federal budget was released in May, and this is the night that we get to see where the government plans to spend money and also what potential legislative changes there are in store. Now, this budget was a cash splash that everyone was expecting, with money being allocated to job training, health funding, childcare, aged care, infrastructure, and a number of other areas. In terms of legislative changes, there are a number of proposed changes to superannuation. The main one was a repeal of the work test for people aged between 67 and 74 on non-concessional contributions and salary sacrifice contributions, which is good news. Another change that I particularly liked, and this one is for first home buyers, is that you can now use your super to save up to $50,000 under the first home buyer super saver scheme, whereas at the moment it's only $30,000. So this is a really good move. There was also the introduction of a family home guarantee for single parents and an extension of the new home guarantee as well. There wasn't a whole lot on the tax side of things this budget. However, they did announce that the low to middle income tax offset will remain in place for the 2021-22 financial year. Now, this is really good news because it basically means that if you're a low to middle income earner, then this will potentially save you up to $1,080 of tax. If you want a more detailed rundown on the budget, I've done a full video explaining these things in more detail, and I'll link that in the description box below. The final JobKeeper payments have come to an end, and a lot of economists were calling this a looming economic cliff, with the worry that it would lead to a jump in unemployment and the closure of businesses that were relying on these payments. Largely though, this appears to be a bit of a non-event. The economy is actually traveling really well at the moment. There's plenty of demands for goods and services, and it appears that the unemployment figures are continuing to improve post-COVID as well. To finish off this episode of Hot Money Topics, there are a few superannuation items that we need to discuss. Now, firstly, and this was announced just a few days ago, the government is going to extend the temporary reduction in the minimum superannuation drawdown. The minimum drawdown on pension accounts were halved when COVID hit to allow pensioners to preserve their superannuation pension balance while the market is down. The reduced minimum drawdown will now apply in the 2021-22 financial year as well. Also, with regards to superannuation, this is the last month that you can get final superannuation contributions in before the end of the financial year. So whether it be a personal tax deductible contribution to help you reduce tax, or maybe you're aiming for the government co-contribution, now is the time to start thinking about making those contributions. The next video that I put out, and it shouldn't be too far away, is going to explain this in more detail and really go over what type of contribution you might want to make prior to the end of the financial year, because this really is a step in a lot of people's financial plans that they should take into consideration every single year. But that's it for this episode of Hot Money Topics. I hope you liked it. If you did, please give it a thumbs up, and I will see you guys in the next one.